In this video, I'm going to cover what has happened over the last week in relation to the markets and of course the news. I'm also going to be looking to see how they're going to affect the markets moving forward next week. But more importantly, I'm going to answer the question, has the recession officially been announced? Hi, I'm Caach Crypto. If you're new to the channel, please don't forget to hit the subscribe button and of course that notification bell to be in the loop with all the latest content I'm going to be producing on this channel. And of course, why not hit that like button if this is the kind of content that you like to see. Now, before we get straight into it, please do read this disclaimer, pause it if you have to. Nothing that I do say in this video is of financial advice whatsoever. Please, if you are seeking financial advice, go and seek a professional to do so. So, what was the buzz this week? Well, the financial markets have been concerned about a potential slowdown in the economy following lower employment numbers and an increase in layoffs in the private sector, which caused a lot of concern. But on Friday, even though it was Good Friday and it was a shortened trading day, the official US unemployment numbers were released and they were on point. However, they showed a slowdown in the rate of employment in the US, which will likely raise concerns across global markets about the possibility of an economic recession. Myself and many others have been banging on about this for a while, and I believe that it's going to hit harder than the one that we saw in 2008 and of course the dot-com crisis. A term that a lot of you young traders might be unfamiliar with, which started back in the late 1990s. So this economic recession that's brewing is certainly going to hit hard, with layoffs increasing and when people start losing their jobs, failing to pay their mortgages, their debts, their credit cards and other financial obligations, that's going to cause a chain reaction. This is going to ripple effect onto credit card banks and corporate earnings since less money will be being spent overall. Now, to answer that question from the beginning of the video, are we officially in a recession? Well, no, we're not officially in a recession yet, okay? As indicated by positive GDP figures in the UK, US and of course Europe, there is a growing fear factor creeping in, making us feel like we are in a recession anyway. Even if we aren't technically in a recession though, the lack of confidence and decrease in disposable income is going to make it feel like we are. So do keep an eye on your wallet. So what do we have this coming week to look out for? Well, we've got all the banks reporting their earnings, and one of them that's particularly noteworthy is First Republic. It's interesting to think that the second tier bank had to be bailed out by larger banks with a whopping $30 billion. But unfortunately, that may not be enough to keep First Republic afloat. It's going to need a lot more money than that. Do you remember when First Republic made headlines after the collapse of SVB and Signature? Well, that's when it declared they had issues and had to be rescued by the banks, which is really exactly what happened. However, that rescue plan was only intended to be a short-term fix, and now they're wondering how First Republic plans to pay back that $30 billion loan, if at all. Well, to be honest, in my opinion, the likelihood is that that bank will most likely fold, be taken over by a larger bank, or receive a bailout from the Fed or the US Treasury. But of course, time will tell. Speaking of the banking crisis, it may not be in the headlines or on your screens as much lately, but it is still here and it's not going away anytime soon. Looking at what Jamie Dimon of JP Morgan had to say last week to economists and bankers, it was certainly interesting. To sum it up, basically, without having to read this whole article to you, he made it clear that the banking crisis is far from over and we can expect to feel its impact really for years to come. It is something that we do all need to keep an eye on, especially when it does come to the tier 1 banks. So, speaking of, JP Morgan Chase is also reporting its earnings this week on Friday, along with PNC and other financial institutions like Wells Fargo. Analysts are predicting that their earnings will be down by around 6% across the financial sector. And by that, I mean the whole sector, not JP Morgan. This is going to be the highest downtrend patterns that we have seen since 2020. And it's clear that the banking sector is feeling the pressure as liquidity becomes tighter. So, let's move on to the foreign exchange markets. It seems like the dollar, which you can see here on the right side of your screen, which is the Dixie, is going to be slightly weaker again this week. Okay, that's the way I'm seeing it anyway. I keep mentioning dollar weakness, but it looks like it's going to be a trend in 2023, but the way things are going. We can expect some dollar weakness again for the major currencies because it's unlikely that the Fed is going to dramatically increase interest rates. There are several reasons for this argument. I'll just name a few. For example, the unemployment rate is likely to rise, the economy may go into a recession, and, well, we have the banking crisis to worry about. All of this together puts the Fed in a difficult situation because inflation will continue to rise, but they're not going to be able to raise rates freely without risking, of course, further damage to the economy. This is the issue regarding the Fed and the foreign exchange. Now, as a result, we can expect a slightly weaker dollar, as we said, and of course a rising in the majors like the pound and the euro. And we can see that here in the euro US dollar from September 22 was the bottom there. It's been on a steady incline. Yes, we had this retracement, but hitting the 200 EMA and bouncing back off and going back on its uptrend is indicating that strength. Same thing with pound USD, very, very similar situation here. Again, September, it followed the euro pretty closely there, of course. Now let's talk about gold. I've been telling a lot of people, you know, my friends, colleagues, etc., for a while now that gold will surpass the $2,000 level, and it did just that just a couple of days ago, as we can see here, following this nice big uptrend again from the start of November, and it's now sitting tightly in this range, just below 2,000. What is it now? 1998. I strongly believe if gold does keep following at this rate, that the price of gold is going to continue rising, and we'll probably get through that 2050 level, which is sits around here. That's what I'm looking for a first target, and beyond that, going towards the 2100 level. Okay, that's where I'm seeing gold. Beyond that, it's going to be hard to say where the price of gold is going to go. Of course, it all depends on whether the resistance at that level stops it from moving any higher, as well as, of course, well, what is exactly going to go on right now. And remember, to that point, gold is seen as a safe haven, but we'll save that for another video. Moving swiftly on to cryptocurrencies, particularly Bitcoin, is currently sitting comfortably rock solid at just under 28.5. Okay, so it's at 28.489 at the moment. As I mentioned before, to keep with its bullish momentum, as well as maintain its narrative as a true hedge against inflation. And again, remember, that is what Bitcoin was created to be. The bulls do want to see the price hitting that 30K mark, especially next week, okay, and climbing back into that particular zone of heavy interest, which you can see here marked up in my screen. On the other hand, of course, the perma bears are, of course, waiting for it to fall and retrace to at least back to 25K area, which will bring it down here and beyond down to the 22K area, which again is another particular zone of heavy interest to the downside. However, for that to happen, there is going to need to be some serious news of regulation coming into play, and of course a significant economic downturn. As far as regulation is concerned, of course, we saw a lot of news happening in the previous weeks as well in regards to that. So it's not a far-fetched thing. So it is something to keep in mind of. But at the moment, it does seem that the bulls have taken control of the situation when it comes to cryptocurrencies. Finally, let's take a look at the US Treasuries. Where we got? Let's look at the 10-year yields, which are currently experiencing a significant drop in yield, which means basically that the prices have gone up. This is often seen as an indicator of an economic recession, all right? Keep that in mind. So it's definitely something that you want to keep your eye on. As the yield continues to fall, as we have seen it now past this significant zone, which is a 200 moving average on the daily, high-tech stocks do tend to benefit, okay? And we've seen that already happen, in particular with the NASDAQ. Let's just have a look at the NASDAQ. We've seen that on a nice uptrend. What else? We've got some tech stocks. Just look at Microsoft, for example. Again, Google, same sort of thing. So we're seeing that happen right now as we speak. And this is all happening as investors are looking out for alternative investments with lower risk, causing those prices of those stocks to rise. However, if the economy does enter that recession, which it does look like we're heading towards, even high-tech stocks like these will lead to struggle and face potential layoffs in the future due to being potentially overvalued right now. So that rounds up the end of the weekly catch-up for you guys. Let me know if you like this kind of weekly catch-ups on a Sunday. I think it's a good way to summarize on a brief level what has happened for the week, news related, and of course movements in the market, as well as how it can affect the markets onto the next. Obviously, I didn't go into detail with the markets and the prices and everything, but again, that's all part of the catch-up. Of course, anything can happen, as we know, but I do hope this video has given you some kind of context as to where we are right now and to set you up right for the beginning of a new trading week. If you want to see more of these kind of videos, hit the subscribe button and tickle that little bell to keep up to date. Again, if you did like this content, don't forget to like it as well. I have also started a Twitter and TikTok account, all right, which I'm playing around with. So if you haven't already, you can find my links in the description below, as well as my YouTube channel will be on the top right of the banner, and of course my link page, which again is in the description below. Anyway, on that note, I'm going to leave it there. Hope you've enjoyed this video, and I'll catch you on the next one.